local bourse facing lower market sentiment this morning. This is after economic data from China, including GDP, made investors wary. Chantal Marx is head of equity research at FNB Wealth and Investments, joining us now for a quick update on how the JSE is performing in early trade. Chantal, good morning to you and thanks indeed for your time. Give us your quick overview of how the markets are faring so far this morning.
Good morning. Yeah, markets have had a very slow start so far this morning. I mean, we've had all sorts of euphoria going into the new year. Definitely a really nice January rally propping up local equity markets and global equity markets alike. But I think that this Chinese GDP print just gave pause for thought today, even though it was better than anticipated. Just the fact that it was so weak really, I think, made market participants sit back and take a little bit of a breather. So we have everything China facing basically under pressure today, including mass fashion process and then the broader resources sector as well. And that, of course, makes up a big part of the JSE. So we are negative in early trade today. But interestingly, the small caps are actually slightly higher today, which tells us that it's not an SA specific issue, but more a global issue as it relates to China.
Let's talk commodities. Oil prices, they were mixed in early trade after China posted its weakest economic growth in nearly half a century. Talk us through those developments.
Yes, so I mean, if you are expecting demand to come under pressure, or demand has been under pressure for something like energy or economic activity has been dampened, you will see oil prices come under a little bit of pressure. I think the directionlessness we're seeing at the moment really is a function of economic growth in China being under pressure, but also the prospect of economic activity improving and things not having been as bad in December as what was initially thought. So I think we are going to struggle for direction in energy markets over the next few weeks. Apart from the fact that China's reopening and demand is expected to rebound there, we're still questioning whether or not we're going to get recessions in some of the largest economies in the world, including Europe, the US, and the UK. So a lot still needs to happen, and we can probably expect volatility on the back of it.
Yeah, talking about energy, I know that the mining sector has been complaining about production. Well, let's actually talk about mining production and the sales figures for the November 2022. Those numbers expected out. What should we learn from that data? What can we expect?
So we've had several months of very weak mining production, and I don't think that November is going to be any different. Consensus expects mining production to fall by about 6.5% in November. It's a function of a lot of things. We have had a bit of a pause in the commodity price improvement over that period. It has since rebounded again, but remember, we're looking 2 months back. So a lot has changed since then. Also, an issue that the sector is likely facing is higher input costs. Inflation has been quite high, and that might put some pressure on the production profile as well. And then, of course, load shedding. A lot of these mines cannot operate in the absence of electricity, and load shedding would have had an impact on their operations as well. So unfortunately, we're probably going to see another weak print and the mining sector actually detracting from economic growth in the fourth quarter.
Let's conclude the conversation with inflation expectation for the year, which increased to 6.1% in the fourth quarter. That was up from 5.9% previously. Now, that's according to a survey conducted by the Stellenbosch-based Bureau for Economic Research. Talk us through those sentiments, Chantal, and what they tell us about inflation and the impact on consumers.
So our economists actually expect inflation to come down this year, but perception is by far a heavier indicator than reality, right? Because if people on the ground and businesses and consumers are thinking that prices are going to go up in the future, then it could weigh on certain decisions that they make in terms of their consumption expenditure. So that could weigh on economic growth. That said, if you expect prices to go up in future, odds are that you will make important spending decisions now. So it could actually be quite positive from an economic growth perspective, just because of that front loading of economic activity. But certainly if the survey translates into reality and inflation is higher than what the market is expecting, higher than what the Reserve Bank is expecting, then we could see further interest rate increases, and that will be a detractor from economic activity. So an important survey, I think, and important insights into what the feeling on the ground is relating to price increases next year
Chantal
or this
Marx,
year.
let me thank you very much for that markets update.